Okay, guys, welcome to VNTR expert session with GoMining. Jan from GoMining will teach us today about Bitcoin mining and why invest in Bitcoin mining and the different ways to invest. So thank you for joining us, and please introduce yourself and feel free to share your slides and go through the session.
Sure. Yuri, thank you so much for the welcome, and it's an absolute pleasure to be here with all of you. So I'll start maybe with a couple of words about myself. So I've been in the crypto space since 2018, but in a professional capacity, I have started not so long ago, so about a couple of years ago, and actually GoMining is the first time I've been involved full time in this space at a professional level. But my trading days started, I believe, already in 2017, 2018. And my background more in the fintech and traditional finance, so always in the commercial and client-facing roles. My previous role was as a manager in global business at Revolut, and before that also in traditional finance. But I've been looking to make the jump into crypto for quite some time, and here I am today, looking to share some of the knowledge and some of the expertise that we have accumulated as a business in the space of Bitcoin mining over the past 7 years of our operations already, and yeah, hopefully introduce some of you, maybe many of you, to the opportunities that exist in this space. So with that, I think I will move into the presentation because we do have a little bit of ground to cover in terms of the right. So what happened? Where did this presentation go? Sorry, one sec. Apologies for that. Okay, so here we are. Let me just make this a bit smaller so I can navigate. So is my screen visible? All good? Proceed?
Yeah, perfect.
Perfect. Okay. So let's get started. The topic of today's masterclass is Bitcoin mining, a smart investor's approach. I believe that a smart investor starts with understanding what is going on, and I think this is the main point of what we are trying to do today. So take a step back and introduce the fundamental concepts around Bitcoin mining, so that as we get deeper and deeper into the theory and the opportunities, we first lay down the groundwork for understanding, is it a good investment opportunity? Is it a good idea to enter this space? And that's why I'm here for today. And let's get started. So just to give you a brief roadmap of what we're going to be talking about, I first want to talk a little bit about Bitcoin, because as you know, Bitcoin, I mean, no real point of talking about Bitcoin mining if we don't have a understanding of what it is that we actually are mining, which of course in this case is Bitcoin. And then we'll look at the concepts surrounding Bitcoin mining. So we'll introduce the concept, what is it, how does it relate to Bitcoin? And then we'll spend a bit of time on the economic rationale for Bitcoin mining. So all of us have the opportunity to go to an exchange today and purchase some Bitcoin. But the question is this the best way for me to get exposure into this space, or should I be actually perhaps considering Bitcoin mining as an alternative? We'll briefly touch on the current landscape, and then we will tackle that question that I just said specifically. So to mine or to buy Bitcoin, or maybe nothing at all. That's actually a valid point of view as well. And then we'll, in the end, we'll have the opportunity to provide some guidance on how, and all of you could potentially think about doing your first steps in this space.
But, Jan, just a question, if I may interrupt.
Yes.
Could you also spend a few words at least about GoMining, the company? So what exactly the subject of the company is and what you are focusing on? I mean,
right,
it has obviously something to do with mining, but happy to understand a bit more. Yeah.
Of course. So I wanted to. There is a point in that about that in this presentation. It's actually
okay. Sorry, then apologies for interrupting your flow. Then please carry on. Yeah.
No worries at all. We'll touch on what GoMining does. I mean, as your intuition is absolutely correct, we are in the space of Bitcoin mining. However, I think we are also at the forefront of emerging technologies and new solutions and new ways of entering the space profitably and easily. So we have a new solution which is very much on the Web3, so this new generation of investment styles. So we have some Web3 solutions, but underneath it all, we are very much a large-scale infrastructural project focused on Bitcoin mining. But we'll talk about how we are bridging, the digital with the physical a little bit later in the presentation. So if at that point I still have not answered your question, I'll be happy to get back to it. So okay, so let's get started. Let's first talk a little bit about Bitcoin. And I do not want to spend too much time on this, but I felt that we got to talk a little bit about Bitcoin if we are going to be talking about Bitcoin mining. So as all of you probably know by now, I mean, I'm sure all of us have heard of Bitcoin in the past, but Bitcoin is the original decentralized digital currency, right? So when we are talking about cryptocurrencies, we are talking about digital currencies, and Bitcoin is the original digital currency. It was pretty much the first one, and even today, so 16 years later, it is still not just the dominant force in all of crypto. It is also the original implementation of blockchain technology in general. So there were some attempts before, some partial attempts, but when we also think more generally about blockchain, Bitcoin was the first, let's say, product that had fully developed and implemented blockchain as the foundation of the infrastructure of this digital currency. So we all know what it is. We know that it's the original digital currency. We have seen probably price charts. We know that it has recently passed all-time highs, and more specifically, the psychological barrier of $100,000. And so it's again a hot topic. But what I would like to just mention are a few things that I think are important for people who maybe don't follow it that closely, right? So Bitcoin operates without central authorities or intermediaries, right? So at the end of the day, the Bitcoin blockchain records transactions. Right? It's a public ledger that adds new transactions in blocks. But it does so without authorities or intermediaries such as the banks or other financial institutions that typically do this bookkeeping by themselves, right? So here we have a decentralized system of bookkeeping powered by blockchain technology. And what it means is that no one entity can directly control or change it, right? I cannot go in and say I'm changing the supply of Bitcoin today. This is not how it works. So it's a trustless system in this sense, right? Which is one of the core features and reasons why it was developed back in 2008 and 9. So the second important thing which I want to mention is that by utilizing blockchain technology, it ensures finality of transactions, right? So it means that once the transaction is recorded on the blockchain, once it gets added to this public ledger, it cannot be reversed, right? There is no, so if I, for example, make a wrong transaction, there is no central authority that I could go to and ask, for example, for my money back, right? So this finality was, again, a feature, not a bug, as they say, but in terms of creating a peer-to-peer monetary system, these two things, so lack of authority in the middle and the finality of transactions, were core concepts that were to be implemented and as a way of doing things different and perhaps better, right? So again, users can send value globally with lower fees and increased privacy. So this was the original promise. Today, it is not maybe always the case, but especially when we want to transfer value across borders, that's where Bitcoin can potentially really shine, because the fees are lower, the processing time is faster, and it can really be transferred anywhere in the world. Importantly, another feature is that its supply is fixed. So perhaps you know, I'm sure some of you do, that there is a finite amount of Bitcoin that will ever be created, and that value is 21 million Bitcoins. And over 94% of all Bitcoin that was ever mined or created has already been created. So the market is already has access to 94% of the entire Bitcoin supply. And Bitcoin mining is the business of creating the last 6% of Bitcoins that will ever be added to the total supply of Bitcoin. Okay, and this is what we will be talking about today when we talk about Bitcoin mining. And so these are some features that maybe not all of you are familiar with, but the thing that I wanted to mention is that in the original days, when Satoshi Nakamoto, whoever this person or group of people were, when they were designing Bitcoin, it was thought of as a monetary system. So an alternative to the dollar and other traditional currencies, where we are saying, look, why do we need institutions in the middle? Let's do things between ourselves directly. And I think over time, and especially today, the narrative, when we think about Bitcoin, shifts more and more towards the store of value, right? So, or as people will often say, the digital gold. And if we explore some of the features of Bitcoin, I think the analogies with gold are quite abundant. And I think the technological limitations, such as the low volume of transactions that can be processed on the Bitcoin blockchain, really steer it towards the digital gold narrative much more than like an alternative to the dollar. So this is when today people think about Bitcoin and how to utilize it. They're not really thinking that often about paying for coffee with it. They are thinking about it as a store of value, much like gold, that will increase in value over time, and that is scarce. So these are a few notes on Bitcoin in general in terms of some of its features. However, when we look at it as an asset class, there is a few things that I think are worth pointing out. The first one is that Bitcoin is amongst the fastest growing assets in history. Okay, so the price performance of Bitcoin has vastly outperformed indexes of the major stock exchanges, whether we look at the S&P, the NASDAQ, or the FTSE. If we look at the numbers in just about any time frame, last year, last 5 years, or last 10 years, the annualized returns, have we just put some money into Bitcoin, have been vastly outperforming these indexes. Now, of course, I understand there is a price to it. Bitcoin is considered more risky. Bitcoin is more volatile. However, if we just look at this metric specifically, we can see that the gains were larger by orders of magnitude. And the question is, does that risk, does the volatility, does it, for me personally, outweigh the benefits that come from these very high returns? And if we look, for example, in this year, we will also see that Bitcoin has performed extremely well, outperforming some of the major investment alternatives that a lot of investors look to allocate some funds into. So this is, on average, over the past 13 years, Bitcoin has achieved an annual growth rate of around 103% per year. And so this is the starting point of thinking about why Bitcoin, right? And is Bitcoin something that I should be interested in, right? And then that's a little bit about the past. But if we look into the future, the expectations for the future growth of Bitcoin are also very bullish. So not just mine. Please don't take my word for it. I try not to be biased, but if you look at some of the predictions from what I believe to be reputable institutions, JP Morgan, Citibank, they all put Bitcoin price 2.5 to 3 times as high as it currently already is in the span of the next 3 to 4 years. So the large narrative around what I'm saying here is that the past performance has been very good, meaning that we all should have probably gotten a little bit of Bitcoin a few years ago, but the expectation in the future is equally bullish, right? And of course, we're never going to get back to these times where you could get a few 1,000% per year on Bitcoin as it grows in market cap. However, the opportunity for significant gains in the future is there, and it's not just retail that is driving these expectations, it's also the institutions. So that said, we also should, in my opinion, put Bitcoin into perspective on a whole list of typical assets. And if we look at the largest market cap assets in the world today, Bitcoin, of course, this list doesn't include real estate. Probably would have a prominent location here, but I believe that it's fair to say that Bitcoin has already achieved mainstream status in financial markets, right? And if we look at the market cap of largest assets in the world, when we treat individual company stocks as one of these assets, we see that Bitcoin has broken into the top 10 already, and it's sitting at 7th place, overtaking silver in the not so long ago as the second, let's say, highest market cap commodity, if we could say it, if we can call it a commodity, which I think we can. It's already doing very, very well, right? So the market cap of Bitcoin far surpasses some of household names such as Saudi Aramco, Berkshire Hathaway, and by orders of magnitude, for example, companies such as Visa. And if we look at the growth trajectory of Bitcoin, only Facebook and Tesla have ever reached 1 trillion market cap faster than Bitcoin. But if we look at both Facebook and Tesla, Bitcoin seems to be doing a little bit better today. Why has Bitcoin been doing so well this year? Well, I think it's fueled a lot by the institutional interest, the development of structured products such as the ETFs, which allowed large institutional players to enter this space. And we feel that these institutions will continue to drive favorable price action for Bitcoin in the future. And we may see it breaking into the top 5 and perhaps already in 2025. And then this is, I think, something which is also very interesting. This was taken from BlackRock Digital Assets presentation, which took place around a couple of months ago. That the data shows that even a small allocation into Bitcoin improves portfolio performance over several time periods. So the benchmark here is a typical 60-40 portfolio. And if we look at the returns, on these portfolios, we have a typical portfolio, and then we have the same portfolio, but with 1% Bitcoin allocation and 3% Bitcoin allocation. So it doesn't take a lot of the portfolio to, in my opinion, significantly improve portfolio performance, right? So we can see that the returns with Bitcoin allocation of the portfolio have improved, whether it's been a 1 year's time frame up to 10 years, in just about every time frame. It turned out to be a good idea. It comes at an increased risk of volatility. So we can see that also the volatility of these portfolios tends to go up with a larger Bitcoin allocation. However, I don't think the difference in the volatility is really that huge, right? So this is just some food for thought about why putting Bitcoin into a portfolio may be a good idea. Okay, so that's what I wanted to say about Bitcoin.
Sorry,
yes.
Can you hear me? Yeah, sorry.
Yes.
Just a question about the portfolio. You said 60 to 40 typical allocation. What is 60-40? It's about share or
60% stocks, 40% bonds. That's
okay.
that's what they used as the benchmark in this presentation. I do not have the exact details. I do not have them on me right now, but it's probably something I can do some digging on.
Okay, thank you.
No worries. Okay, so idea of Bitcoin, fastest growing asset, one of the fastest growing assets in history, continues to have a very bullish outlook, not just in retail, but amongst institutions. And historically, again, seems to be a good idea for a small allocation to improve portfolio performance. Okay, so so what about Bitcoin mining? So what is Bitcoin mining, and how does it actually relate to Bitcoin? Well, mining is the process of adding new transactions to the Bitcoin blockchain. So that's the if we don't want to dive in any deeper into what Bitcoin mining actually is, Bitcoin mining provides the critical service of verifying and adding new transactions to the Bitcoin blockchain. So we already mentioned that there is no central authority, and so there needs to be a way in which we can add new transactions into this public ledger. And the way this is done is through the process of Bitcoin mining. And so this is the core of what mining is all about. And I think the important takeaway is that Bitcoin cannot exist without profitable Bitcoin mining. It doesn't mean that mining will be profitable for everybody, but it will need to stay profitable for some entities, because if Bitcoin has a future, that means that Bitcoin mining has to have a future, because without miners, the Bitcoin blockchain cannot be secure. And when it's not secure, the whole Bitcoin value is going to collapse. So there is no way to separate mining from Bitcoin, and I think that's an important takeaway. To go back into a little bit of the mechanics, and I don't want to spend too much time on this. However, the process of mining is expensive. It requires specialized equipment, and it requires significant amounts of electricity. And so for providing this service of securing the Bitcoin blockchain, miners get rewarded with newly created Bitcoins. So that's the reward, because we are investing capital, we are investing funds in order to secure and protect the Bitcoin blockchain. But we need to get something in return, right? And this is why miners will receive the newly created Bitcoin to their wallets for the service that they are providing. So the mechanic of this has been defined already back in 2008, and nothing really has changed about it. And if you are interested in exploring the Bitcoin mining process, you will be able to view this later here. But I want to continue forward because I don't want to get too technical, but focus on the large ideas behind Bitcoin mining. So what all of this means is that Bitcoin miners act as gatekeepers of the total supply of Bitcoin available in the market. So we already said that 94% of Bitcoin is already in the market. The final 6% will get introduced to the market through Bitcoin miners. Okay, so we perform this service. We receive newly created Bitcoins, and we can sell them in the market, or we can choose to hold them, for example, for a period of time and wait to sell this newly created Bitcoin that we've received when we think that the price is right. So while everybody else obtained their Bitcoin from trading in the open market, miners received the newly minted Bitcoin with every new block that gets added to the Bitcoin blockchain. So you may be curious, how fast is the supply of Bitcoin growing currently? And the answer is that the current block reward is 3.125 Bitcoin. So at current prices of Bitcoin, it's around $300,000 worth of Bitcoin get created every 10 minutes. Okay, and that's how fast the global supply of Bitcoin is increasing at the moment. There is a mechanic which lowers this reward, this 3.125 Bitcoin block reward. It's called the Bitcoin halving, and every 4 years, the size of this reward gets slashed, and that's how that's why we have already mined 94% of global Bitcoin, but that final 6%, it is going to take us another 115 years to mine out the last Bitcoin. Because over time, the size of these rewards, the pace at which the supply of Bitcoin is increasing is going to go down. Okay, so we will continue to mine Bitcoin for the next 115 years. And after the last Bitcoin has been mined, the miners will still need to mine. We will still need to do this service of providing security. And the idea is that the miners will receive Bitcoins not from adding new blocks, specifically not from the block reward, but from the transaction fees that are being included in this block, right? So when we transact on Bitcoin blockchain, there are fees involved, and miners also receive a portion of these fees. So 115 years from now, the idea, I guess the original idea was that, okay, we don't need to create any new Bitcoins. Bitcoin is going to or miners will be able to sustain themselves by processing transactions only on the Bitcoin blockchain. But until that point, we still have quite a bit of time. So then to understand what this means for me as a miner, right, or as a person who's potentially interested in investing in Bitcoin mining, how do I think about, well, is this for me or is it not? Can I make some money by doing Bitcoin mining? Well, at a very high level, there's only 3 things that I need to consider. The first one is electricity. And so the reason is that Bitcoin mining requires a lot of electricity. So we use specialized equipment, which you can see here in the middle. And this equipment consumes a lot of electricity, okay? And this is by far the largest variable cost that needs to be included when I think and I evaluate, is this going to make a profit for me or not? And so what that means is that we need an access to cheap electricity source. And if I don't have access to cheap electricity, the economics will probably not come out favorable, or at least I'll have some competing investment opportunities that will look better. So the first thing is I need to think about my electricity bill. The second is that I need specialized equipment. So in the early days, you could mine with your laptop, you could mine, and you could take power from your graphics card, from all sorts of things that no longer are capable of competing. So due to the professionalization of Bitcoin mining, specialized equipment that is created solely for the purpose of Bitcoin mining is now used in industrial mining operations, right? So so the price of this equipment, as well as the performance, the critical factor being energy efficiency. So there is older equipment requires more energy, to generate a specific output, while the newest generation requires only a fraction of energy to deliver the same amount of power. So this is the second part of my equation. And the third part is, of course, what do I get in return? And so in return, I get Bitcoin. And to complete my calculation, I need to understand how much Bitcoin will I receive, and what is this Bitcoin going to be worth? Okay. And if I had to put all of this together, we have sometimes used internally the analogy of a money printer. That if I want to think about, okay, Bitcoin mining, does it make sense or not? I will think of it as a money printer. So what do I need? I need to buy the printer. I need to connect it to electricity, and I need to see how much Bitcoin is going to print and how much I can sell this Bitcoin for. So it's actually a pretty easy model to understand and to do some computations and think about whether or not this will be profitable for me or not. When in doubt, we can think of this analogy to guide our profitability narrative. Okay, so the question then is, well, does it really make sense? Maybe if and of course the conversation about the economic rationale starts with a certain belief in Bitcoin, and that's why I started with Bitcoin, because if we don't agree that Bitcoin has a future, if I don't think that this is an asset worth having in my portfolio, then the economic rationale is not going to work either for buying Bitcoin or for mining Bitcoin. However, we are going to work under the assumption that Bitcoin does indeed have a future, or at the very least, that I want to have one foot in the game and I want to see if it has a future or not. So the fundamental idea of why it may be good to invest in Bitcoin mining versus to just buy and hold some Bitcoin is that through Bitcoin mining, I can generate more Bitcoins over a period of time than an equivalent investment in Bitcoin today. So to illustrate that, I have made this very, we have made this very simple table that highlights this difference, right? So if I have an allocation of around $200,000 and I want to do something with Bitcoin, with this money, I can go to the market, and assuming the price is $95,000, I can go into market and buy myself today 2.1 Bitcoins. That's the idea. The thing is, if that's my total budget, a year from now, I will also have 2.1 and so on and so on, because I allocated and of course I can maybe find some tiny percentage, I can stake it, but this is just a high level illustration of the concept, right? So if I buy and hold, I always have the same amount of Bitcoin. At the same time, I can invest today this money into Bitcoin mining. And when this happens, I will start to accumulate Bitcoin over time, every day, increasing the size of my Bitcoin holdings. And so what it ends up looking like is that after a year, I will have in my wallet a little bit, just around 1 Bitcoin. 2 years, around 2 Bitcoin. 3 years, around 3 Bitcoin, and 4, around 4 Bitcoin. This is, if you know a lot about Bitcoin, it's a little bit simplified. I am aware of that, but the mechanic is the same. So so the idea here is that over a long enough period of time, which in current market conditions is around 24, 26 months, I will be able to reach that break-even point where what I invested today is equal to what I've mined through with mining. But then with mining, I continue to mine. So in the end, I end up having more Bitcoin for a specific investment size than I would have if I just decided to by Bitcoin today. And so at a very high level, this is the idea behind Bitcoin mining. So why is thinking about this long-term perspective helpful? Well, again, there was a very interesting graph here from the same BlackRock Digital Assets presentation, which is showing that holding Bitcoin for 3 or more years consistently delivers positive returns regardless of short-term price fluctuation. And so for many customers, and perhaps some of you are also here in the call, Bitcoin volatility is a critical risk factor, right? So all of us have heard about Bitcoin volatility, but historical data suggests that if we are willing to wait, for a period of 3 or more years, Bitcoin is capable of consistently delivering positive returns regardless of that volatility. So it's the short-term fluctuations versus the long-term trend debate. Of course, this is just, oops, sorry, chat. Okay, so of course, this is based on historical data, and that's not a predictor of future price performance, but it's something to keep in mind. And that 3 years is also right around where where my mining strategy will end up outperforming my direct Bitcoin investment today. And so if I'm thinking of being more on the passive side, I want to mitigate the risk of short-term price fluctuations, then it would again make quite a bit of sense for me to enter mining space rather than just buying and holding Bitcoin. And this is again another point that emphasizes the economic rationale. The final point, which again I think may be critical and often overlooked even by people with experience in this space, is that mining can offer you the ability to obtain Bitcoin at a discount versus market price, depending on the market conditions. So this is something that I will get back into a bit later. But the idea is that when we mine Bitcoin, we do not, with Bitcoin mining, the purchase price of 1 BTC does not depend on the current market price. But my price of obtaining 1 Bitcoin depends on my costs of mining, which are electricity and maintenance, as well as the purchase and as well as the amortization of mining equipment, right? But I can run a calculation taking into account the factors that we said. So I will get to the questions later. So I will not interrupt the flow, and then we can go back to it. But we can make that calculation. How much does it actually cost to mine 1 BTC for me? Because we already discussed the business model. I can look at all the cost components, amortization, terminal value, and what we can get is we can get the total cost of mining 1 Bitcoin instead of buying 1 Bitcoin. So for example, today we know that Bitcoin price is around $95,000, $97,000. But if you run the calculation, and this calculation was run, so this calculation is not fixed. It changes over time. But if you run this calculation, it's very likely that you will end up, depending, of course, on your cost of electricity and depending on the setup, but it is entirely possible that the cost of mining 1 Bitcoin will be cheaper for you than the current market price of Bitcoin. And that essentially allows to buy Bitcoin at a discount. It's not always the case that the cost of mining is cheaper, okay? And that's not the point, because, for example, when Bitcoin price recently was 60,000, it was cheaper than what was coming out as cost of mining 1 Bitcoin. But this calculation about how much it costs to mine one Bitcoin can actually serve as a great benchmark for my personal analysis of whether or not I should buy more Bitcoin from the market now or not. So is it a good price for me to buy more Bitcoin today? If my cost of mining is 80,000 and in the market it costs currently 95,000, I know it's not a good price for me to buy. But if the price of Bitcoin drops to 75K, then it is a good idea, because what it costs me to mine is actually higher than the current price of Bitcoin in the market. So these are the three major points of the economic rationale. And moving swiftly, so I hope this isn't dragging on, but moving swiftly to the current landscape in Bitcoin mining. So as I mentioned, we went through the Bitcoin halving in April 2024, and this is a critical, it's the most important event that happens in the world of Bitcoin mining. It happens every 4 years, and it reduces this block reward, which I mentioned, from by half. So before April, in the beginning of the year, we were, the supply of Bitcoin was growing at 6.25 Bitcoin every 10 minutes. And after April, it got slashed to 3.125. So it got halved, okay? Which of course means that the returns for miners are getting smaller as measured in Bitcoin terms. However, Bitcoin's price action following Bitcoin halving, especially now towards the end of the year, has been strong, fueling optimism in the mining industry. So just to put some numbers on that and some metrics, as of right now, in the current market conditions, Bitcoin mining is generating around 45% or more, but 45% or more ROI per year. And there is significant upside potential if Bitcoin price continues to grow. Because at the end of the day, I'm accumulating Bitcoin, not dollars. And the final return on the investment will depend on when I choose to sell my Bitcoin. But if I just chose to sell, if holding things constant, a year from now, nothing changed in the market, I will be looking at around 45% per year without needing for an increase in Bitcoin price. The global hash rate, so that means the combined mining power of all mining companies in the world, is breaking new all-time highs, meaning more resources than ever are being allocated into Bitcoin mining. That's also true and very easy to verify. Stocks of publicly listed companies have performed very well in 2024. And I have a table here showing some of the companies listed, for example, Marathon, Riot, NASDAQ, plus 70% this year, plus 57% this year. Just about any listed mining company has had 50% increase in its share price, signifying investor confidence in a pretty positive outlook. To compound this, let's say, bullish sentiment, the recent appointment of Paul Atkins to lead the SEC is again fueling optimism, because the stance of the new administration is said, we will have to wait and see, but it is said to be favorable for the crypto industry. And if this materializes, then we have good groundwork for being optimistic about the future. And the technological advancements and the latest generation of mining equipment is already ahead of the curve. So right now, it's possible to mine profitably with equipment that is already quite a bit old, but the hardware manufacturers, they are basically working nonstop on making sure that more energy efficient equipment is available, so that even in case of a short-term downtrend for Bitcoin, the profitability, the underlying profitability will be strong. Sustainability. emerging technologies, policy, and Bitcoin. And it will be the leading narratives in Bitcoin mining in 2025. And very briefly, but some of these things, Bitcoin mining is an asset-heavy industry, and compared to crypto, things don't move that fast in the mining space as they do in some of the other verticals in crypto. So many of these narratives are the same year to year. And one of such narratives is sustainability. And so as global hash rate reaches new heights, so does the electricity consumption. And critical topics in this space of sustainability are the same as they have been: switching to renewables, migrating to more energy efficient equipment so that less energy is needed to generate the same output, and utilizing the byproducts of mining, more specifically heat, to the maximum. So trying to find synergies with other businesses to help mitigate some of the externalities that come from Bitcoin mining. Then in the space, a hot topic is artificial intelligence. So this is of interest to data center owners and people who run machines for purpose of Bitcoin mining, because now these data centers can be potentially repurposed for AI computations. And it's something that, if we look into the industry, many miners are exploring in order to diversify their revenue streams. As always, policy and legislation, a big narrative. So in Europe, there is the MiCA regulation, which is being basically implemented right now, and this is going to be the defining narrative in legislation in Europe this year. While the rest of the world, and that includes also, I believe, Europeans, will be looking at how the new US administration will approach to crypto. The sentiment is said to be good, but this is something that we will be continuing to monitor very closely in the future. And then, of course, a bit of a no-brainer, but much focus will be devoted to price action of Bitcoin as it continues to explore uncharted territory, right? So we are in the exploring phase. We don't know when is the top, when is the bottom. Bitcoin is at new all-time highs, but as the dominating force in all of crypto, Bitcoin will continue to drive the sentiment and outlook for the entire crypto ecosystem. So the crypto ecosystem today is about 60% Bitcoin. That's how much of a monopoly Bitcoin is in the crypto space. And you can probably even see it today. A small dip in the price of Bitcoin has the whole market going proportionally more down. And so everything in crypto goes by Bitcoin, and the price action of it will be a key driver of the sentiment in this space. So to put it together, to mine or to buy Bitcoin. Of course, if you think Bitcoin is going to zero, then there is a third option here, but which is to not do any. But hopefully, I try to give some arguments for why it's good to have at least a small portion of funds allocated to Bitcoin. And so, while I hope that the economic rationale for Bitcoin mining is clear, the choice of whether to mine or buy Bitcoin depends on the investor profile. So Bitcoin mining is the right solution for passive investors. The people who are willing to wait for a longer period of time to steadily accumulate Bitcoin day after day and wait for that price somewhere down the line at which they want to exit. It allows to continue to have exposure to Bitcoin over this long period of time, keeping one foot in the door at all times and ultimately accumulating more Bitcoin in the wallet than direct purchase today. And I think that's how I think personally about Bitcoin mining, which is that, for example, if Bitcoin price goes to 150,000, I think I will be considering selling because I'll be able to realize significant gains. But if I have my mining facilities running in the background, I can realize those gains but underneath, I still continue to accumulate Bitcoin. And so I have one foot in the door. And if it turns out that 2 years later, Bitcoin price is 700,000, then I will be still able to capitalize on these gains because I'm in mining and because I continue to accumulate Bitcoin. But it's not always the solution. And buying Bitcoin may be preferred option for people who have a shorter investment horizon. So speculative maybe is a bad word, or its connotation maybe sometimes bad, but I don't think of it as that. For the traders, basically, who would like to realize their gains and exit the space in a shorter amount of time. Why would it be better in this case? Well, because we've seen when I invest into mining, it takes me some time to get to that critical mass of Bitcoin. So if I think, so for example, to use that same example, if I think tomorrow, but Bitcoin price is going to 150,000, I would probably buy some Bitcoin today, I'm sure, because tomorrow I'll be able to sell it with a 50% profit. Meanwhile, if I invest all of it today into mining, tomorrow I will have my first payout in Bitcoin, but I will not be able to realize this gain, or comparatively speaking, if I had just bought Bitcoin today. But importantly, Bitcoin mining and buying Bitcoin are not mutually exclusive. And I believe, and I think everybody at GoMining believes, that the smart investor will look to utilize a mix of Bitcoin mining and buying Bitcoin. They will use Bitcoin mining as a foundation for the Bitcoin portfolio and as a benchmark. And I said a little bit already about how we can use this as a benchmark. I can calculate my cost of mining one Bitcoin and use that as a way of making my personal decision about should I buy more Bitcoin or not. If the cost of mining is currently higher than the market price in the open market, I will buy some more Bitcoin. But if my cost of mining is lower than the market price, then I will not buy because the price isn't very good for me today. And this mix of strategies allows me to keep exposure to Bitcoin in the future while having the ability to capitalize on short-term gains. So there is no reason, in my opinion, to think about one or the other. We can do both. And I think this is where optimization for Bitcoin strategy really happens. And that's how we can make informed decisions about our Bitcoin strategy. So to wrap it all up, and I hope I'm not taking too much time, but how do we get started? And this is an important point and where GoMining also starts to really shine as a company. So with newly emerging technologies in Bitcoin mining, newcomers have a choice in how to enter the space. So in the not such a long past, there was pretty much only one way of entering this space, and this was the physical mining. So the classic approach, it involves the purchase of physical miners and installing them in data centers with access to cheap electricity. So I will buy the hardware myself, and I will send it to a data center somewhere, and they will operate my hardware for me. That's the classical model. And there are some benefits to it in today's world. So first is that I am the owner, for example, of this hardware. And if something were to happen to the business is supposed to send me back my hardware and I can install it somewhere else. It's also true that this classical model for mining is good for ROI. So most of the time, if we really optimize physical mining and generate good ROI performance. But there are a lot of downsides to this, at least when compared to some of the other options. So the first one is that this requires technical expertise. I need to think about which machines to buy, not just for today, but which machines are going to be the most profitable 3, 4, 5 years from now. It requires a lot of capital to kick things off, because data centers do not want to work with a client who has 1 or 2 machines. They want to invest. They will say, hey, we can run your machines for you, but you need to invest at least $500,000, give or take. But it requires significant capital to get access to good electricity rates so that you can get out this good ROI performance. Many steps required: purchase of equipment, finding data centers, signing agreements. It's a lot of work. I need to find the electricity source, and I have to think about, what if I want to exit my investment? And in physical mining, it's not a very attractive prospect. So typically, if you invest in physical miners, you are there to mine for as long as they live, and then after they are not capable of performing well after 3 or 4 years, you typically write off that initial investment, and you hope that what you've mined out in Bitcoin is enough to also account for that initial hardware cost. So you will most likely treat it as a sunk cost. If you ever do want to sell these physical miners, it's going to take time, and because of the wear and tear, the residual value on it is very low. But this is good, but this is the old way of doing things. The newer ways of doing things are here. So the first one is cloud mining. And cloud mining is the process of renting computing power, essentially from the cloud. It's a really nice idea when you say it like that. So, hey, why do I need these physical miners? I can do some computational work from the cloud, and I can, and that's how I'll generate the power that is necessary in order to mine Bitcoin. It's a nice idea, which makes it accessible. So you can do this, and it's much easier to get started because you don't have to have very large investment. And it's accessible because it's very easy. I do not require this technical expertise. I can just look at a calculator and get started. But there is also some downside to it. So cloud mining has a very bad reputation because of many scam projects. So the crypto graveyard is full of cloud mining projects, and you never really know. And typically this comes from a lack of transparency. So I mean, the most common form of a scam in this space is the Ponzi scheme, right? So new investors pay off the old investors, and we keep going for as long as we can, and then we disappear. So that's the history of many of cloud mining projects, and today they do have a bad reputation. And further, these are typically fixed-term contracts without ability to exit early. So if I lock in my capacity for a year or 2 years, I can't get out. I can't get my principal back. I'm stuck in it for the long haul. Even if it generates losses, I'll be liable for these losses, and there is nothing I can do to really exit. And typically it involves lower profitability because there will be additional fees from the cloud mining, from the cloud providers, and the electricity source is typically not as optimized. So in general, the good cloud mining doesn't deliver the same performance as physical mining. And then there is the third option, which is GoMining. And personally, you'll probably consider me biased, but I do think it's the best of both worlds. And so GoMining is a protocol that tokenizes the Bitcoin mining power. So it tokenizes Bitcoin mining, and it delivers Bitcoin payouts to the clients every day. So by allowing our users to purchase a digital asset, this digital asset, just like a physical miner, it has its energy efficiency and it has its computing power. But this digital asset secures fractional ownership of computing power in real data centers. So I can buy a digital asset, and this entitles me to receive Bitcoin mining yield at a rate of around 45% per year currently, just for holding this asset, because this asset represents my fractional ownership of the mining that is happening in the real data center. So if you put it together, of course, I see we've received mostly pluses here, but I do want to emphasize that it's as accessible as cloud mining. So it's extremely easy to get started, test it out, to start receiving your Bitcoin rewards. It does not require very significant capital, unlike physical mining. Performance, though, is as good as physical mining due to real hardware being used in the data centers. So, for example, GoMining, we publish our mining pools. We publish so anybody can go in on the website and verify that the mining pools and the hardware that is really being used for the purpose of mining. But this hardware is what guarantees very good ROI performance. So because we are not using intermediaries, cloud service providers, we can compete and we can generate top of the line performance through real hardware, but by allowing the accessibility that comes with a typical cloud mining approach.
And how big is GoMining? Like
I will go right. So in terms of how big, there is a next slide for it.
Okay.
Cool. So I will mention that very briefly in a sec. It's easy to exit. So relatively to physical mining, because this is a digital asset, there is a marketplace where I can choose to sell it, and in this marketplace, there is always a liquid price. Yeah, it will typically involve a discount versus the current primary market price, but I can always find a liquid price at which I can exit my investment today if I really want. But if I want to exit today, I will probably need to give a big discount. But I can choose to exit at any point in time. Further, no amortization period on the digital assets. So whereas the physical miners do run out, and then if I want to continue, I need to buy new ones. The digital asset does not have an amortization period in the same matter of speaking. It will continue to mine as long as it is profitable to mine. And there is no need for technical expertise. So of course you need to learn something. I'm not going to say that you don't need any knowledge, but hopefully with just what we've discussed today, that would be enough for you to start taking your first steps, because we as the company take care of all the underlying processes, the buying and selling of hardware, installing it, running it. We leave you with the final product, the Bitcoin hash rate, the mining power, which is securing the Bitcoin blockchain. And this final product, the essence, is what actually delivers Bitcoin to miners all around the world. So we take care of it. We allow you to purchase the final product, the hash rate, and this delivers Bitcoin yield. So,
excuse me, just one question. What is happening to the yield you are producing or you are earning in the meantime? So is it, I don't know if there's a payout mechanism or it just increases the intrinsic value of it, is reinvested, or what's happening with it?
Absolutely. No. The default, there's a few things that you can do with it, but the default is that you will receive the Bitcoin and the hard Bitcoin on the Bitcoin blockchain to your chosen wallet, your Bitcoin wallet on an exchange or anywhere else every day. That's what we have been doing for the past 2 years. So since the NFT, since the digital miner was introduced as the core mechanic, every day you get payouts, and that Bitcoin is in your wallet that you specify. Nobody can ever take it from you. So that's the default mechanism. There's things you can do. There's things you can do with it, but so you can reinvest it into more power. So you can, instead of getting Bitcoin, you may choose to have more power and increase the power or increase your share in the mining that we do. And there is a couple of other features, but what 95% of the users do is they take out the Bitcoin to their wallet. And this happens automatically every day. So just a few numbers about GoMining, because yes, I bet this is interesting. We have been around for a while. So we have more than 7 years of Bitcoin mining expertise. This is maybe not a lot in traditional industries, but it is quite a lot in crypto years. Not maybe dinosaurs, but we've been doing this for a while. We've gone through 2 halving cycles already, and still doing very well. And if you look at just our platform, so through this GoMining system that I just mentioned here, we are currently mining about 1% of global Bitcoin. So this is, I think, a pretty big number. We also have a B2B arm, so we mine for other companies and for B2Bs. So if you look at the total amount of mining power under our management, it's a little bit over 3% of global Bitcoin is being mined in our facilities. However, strictly speaking about this digital asset model, that's approaching 1% of global Bitcoin mining power. So around 6.5 exahash, for those of you who may know, that's the current mining power generated from this solution. We have 3 million registered users on the platform and 110,000 paying users, or we could call them investors. And in that sense, we can say we are the largest mining company in the world. I think that's fair to say, not measured in mining power, but measured in the amount of even small investors, because you can, the retail customer, they can start investing from $25. And so we have 110,000 people who are waiting for daily payouts in Bitcoin every day. And I think there isn't a company in the world, even companies that are bigger when measured in computing power, but I'm pretty sure there aren't companies that have more people, more individuals who are investors, who have expectations for our service, right? And I think in the most mining companies, they mine for themselves, or they have a few very big B2B players. But we have a very large group of customers who trust us with this model every day.
What is the throughput right now? Like how many Bitcoins you mine a year or a day?
So I would have to pull this number because it's actually pretty easy to do. Maybe if we get to the questions, I'll be able to do.
We already passed time. It's kind of
all right.
wrap it up.
So I can do this calculation right
now.
No
but, need.
Okay. But I think it's a little bit over 3 bit. Like it's over 3 Bitcoins. I am pretty sure, but like I also don't want to throw out random numbers. It's a pretty easy calculation, so I can do that later. 130 million sold in hash rate. So our model here again, 130 million dollars that we have essentially reinvested into Bitcoin mining. We also have our token, but the presentation is not about us today, but we also have our token in the market. The current market cap is around 200 million for the GoMining token. And we have very large infrastructure, 350 megawatts spread out across 9 locations. To some of you that may already say quite a bit, but to put things in perspective, the total amount of electricity consumed across our data centers is more than, for example, the financial district of London consumes every day. And so that's what I wanted to say. Apologies for running a little bit over time. It's the first time I'm doing such a presentation specifically. But if you would like, and first of all, I would like to very much thank everybody for staying with me, if you have. And if you would like to check out how we do things, if you would like to continue to explore what we do at GoMining, but also as a great way to start to understand Bitcoin mining at a deeper level, we welcome you to try, and we encourage you to try out our platform. So for everybody who has attended this session today, we would like to give a free digital miner. So your first Bitcoin miner that will start mining Bitcoins for you. And that will be a first step for you to think about, perhaps getting a little bit of exposure into this space. In order to claim this digital miner, it's not very difficult. We have a sign-up link, but in the end of the day, if you go directly to our website, if you've done that already, that's also okay. But we do ask to write to us on the Telegram group, which can be accessed through this QR link. It's our VIP chat at GoMining. And if you drop us just a message with your customer ID and the promo code VNTR, we will send you a free digital miner, and we will also provide a discount on any purchases that you may want to, or for sure, at least on the first purchase that you may want to do in the future. But we are always happy to continue the discussions. So at the bottom, if you will have any questions after this session, please do also feel free to reach out to me, or you can speak to our representatives at the VIP chat as well. So thank you very much. And yeah, that's what I had prepared.
Guys, do you have any questions? Maybe we can do 1 or 2 questions. Sorry for running late.
Apologies.
Very informative presentation. Guys, feel free to unmute and ask if you have any question. Yeah,
Yes,
Frederick.
yes, I have a question. The process to invest through your platform, I don't really understand. Are we buying a token, or I don't really understand how it goes?
Right. So at a technological level, what it is an NFT. So the thing is, it's not that we want to be in the business of NFTs. It's more about the fact that NFTs allow us to sell this fractional ownership and make it a tradable asset. So the actual asset that we are buying is an NFT. It's a tradable NFT. This NFT comes with computing power and energy efficiency as the metadata that defines your share in the mining operation. So if you would like to, for example, sign up and we will send you a free asset, a free NFT, that will hopefully clarify things more. We're also happy to, look, for example, for a follow-up call, and I'll be happy to demonstrate the platform.
If you buy NFT, so there are different types of NFTs for different capacities, right? It's kind of...
Yes, so exactly. So the NFTs have different capacities. They can be very tiny, or they can be quite big. So the largest NFT you can buy is 5,000 terahash. So Frederick, I believe you know what terahashes are. So the largest NFT is 5,000 terahash. The current price of that is around $100,000. But the smallest amount of power that you can buy is 1 terahash, and that costs around $25.
So, okay, so my question, if this is an NFT, so is it a tradable asset?
Yes.
I put it on OpenSea or trade it? Yeah.
Yes.
Mm-hmm.
So
okay.
It's yes. Okay. The short answer is yes.
Okay. Okay. I have many more questions, but whatever. I prefer to leave this for after. Okay.
Okay. Absolutely. Happy to.
Yeah, we can introduce you to Jan, Frederick.
Okay. Okay. Good. All right.
Okay.
Mm-hmm.
All right.
Guys, any additional questions before we wrap up? No questions? Last question? Okay, guys, thank you very much for joining. Thanks, Jan and GoMining team for the education. And looking forward to collaborate with you guys. Thank you, everyone, and enjoy the upcoming holiday season. See you soon.
Thank you.
It was
Bye-bye.
a pleasure. Thank you very much.